As of right now, the markets are open and SMX Security Matters PLC is trading at 24.17 USD, showing a steady climb of 1.21% in today's session. This movement might look like a standard intraday wiggle to the average observer, but if you have been watching the tape on this one lately, you know that $24.17 represents a very specific kind of equilibrium in a stock that has spent years searching for a floor. Most people look at a ticker like SMX and see a small-cap technology play that lives in the shadow of giants like Nvidia stock or Apple stock. They assume it is just another speculative venture trying to find a niche in the ESG world. But the reality is that SMX is attempting to build something far more foundational, a physical layer of the internet that attaches a permanent, unerasable identity to raw materials. While the general market narrative is focused on whether small caps can survive a high-rate environment, the deeper reality for SMX is that they are no longer just a technology story. They have transitioned into an execution phase, where their molecular markers are actually being embedded into the global supply chains of gold, rubber, and plastic. This is the gap between expectation and reality that we need to talk about today. If you are using Schwab Intelligent Portfolios or managing an individual brokerage account, you might be used to the relatively predictable swings of the Mag 7, but SMX operates in a different world. The common belief is that this company is a high-risk, pre-revenue gamble. However, if you look at the institutional movement and the recent shift in their treasury strategy, specifically their new corporate account with Kraken to manage digital reserve assets, you start to see a company that is preparing for a world where physical goods and digital value are inextricably linked. This is not about the next quarter's earnings. It is about who owns the truth in the circular economy. For the retail crowd on the Robinhood app, SMX has often been a name associated with extreme volatility and reverse splits. But the reality on the ground in 2026 is that the technical risk has largely been mitigated. The markers have survived the furnace, the recycling bin, and the shredder. Now, the question is simply about adoption and the speed at which global regulations force industries to use this kind of verification. When you look at online investment trends today, there is a lot of noise about transparency, but transparency usually just means better paperwork. SMX is different because it replaces that paperwork with science. They are embedding submolecular particles into everything from denim to gold bars. This is why the stock is showing resilience today. It is reflecting a market that is starting to value proof over promises. If you are doing your own self-investing or looking for investment help on platforms like Fidelity, you've probably noticed that the ESG label has lost some of its teeth because people realized it was easy to fake. SMX is the antidote to that. By creating a digital product passport that is actually inside the material, they are making it impossible to greenwash a supply chain. This is a massive shift in how we think about value. Think about the way you trade Tesla stock or Nvidia stock. You are betting on the future of transport or computing. When you trade SMX, you are betting on the future of the physical world itself. The recent $111.5 million equity purchase agreement they signed at the end of 2025 changed the game for their balance sheet. It gave them the runway to stop worrying about day-to-day survival and start focusing on these massive national-scale deployments. We are seeing Singapore use this for their national plastic circularity. We are seeing Spain and France look at it for textile authentication. This isn't just a pilot program anymore. It is becoming infrastructure. And as any seasoned trader using interactive brokers will tell you, when a technology becomes infrastructure, the valuation model has to change. It moves from a speculative multiple to a utility multiple. Comment below how many shares of SMX you currently hold, or if you think the recent treasury shift into digital assets is a smart move for a company in this sector. I'm curious to see if you think this adds a layer of stability or just more volatility to the mix. The intraday action we are seeing at 24.17 USD is part of a larger consolidation phase. After the massive dilution events of 2025, the share count has stabilized and the proof economy narrative is finally starting to take hold. For those of you using SoFi Invest or the Fidelity mobile app, you know that timing these entries is everything. The stock has been through the ringer, but the underlying business model is more robust than it has ever been. They are essentially a toll booth for the circular economy. Every time a piece of plastic is recycled and verified, or a gold bar is authenticated, SMX stands to collect a fee. That is a very different business than just selling a piece of software. It is a recurring, material-based revenue stream that grows as the world gets more regulated. Let's look at the business model in detail. SMX uses a marker, a reader, and a blockchain-backed algorithm. The marker is a hidden identity that doesn't change the physical properties of the material. Whether it's liquid, solid, or gas, they can mark it. The reader is a proprietary device that can see these markers even after the material has been processed or recycled multiple times. Then the algorithm logs that data onto a ledger. This creates a permanent, unalterable record of a material's life. If you are into online investing or using investing sites like Interactive Brokers Trading, you understand the power of an unalterable ledger. In a world where fake goods and environmental fraud cost trillions, a company that provides a scientific source of truth is in a very strong position. The Plastic Cycle Token, or PCT, is another piece of the puzzle that the market is just starting to price in. This is a framework where verified recycling activity is turned into a digital credit. Instead of companies just saying, "We recycled 50% of our plastic," they have to prove it through the SMX system to earn the tokens. This turns sustainability from a cost center into an asset class. For a trader sitting on a Fidelity brokerage account or using Fidelity Wealth Management, this represents a new kind of exposure. You aren't just betting on a company, you are betting on the creation of a new market for verified physical activity. This is why the opening of the Kraken account was so significant. It wasn't just a random crypto play. It was a structural move to support the accounting and treasury needs of this digital credit ecosystem. Now, let's address the elephant in the room, the historical volatility. If you look at the long-term chart of SMX on the Robinhood app or SoFi trading platform, it looks like a mountain range. The reverse splits and the constant need for capital in 2024 and 2025 were brutal for early shareholders. But that is the before story. The after story is this new $111.5 million facility. It gives them the ability to draw down capital as needed without the same kind of desperate, high-cost financing that plagued them in the past. This is a massive change in their financial architecture. When you are doing investment help or looking for the next big move in the industrial sector, you have to look for these inflection points where the balance sheet finally matches the ambition of the technology. The reality of SMX today is that it is sitting at the intersection of three massive trends: global regulation on supply chain transparency, the rise of the circular economy, and the digitization of physical assets. While the general market narrative is focused on whether small caps can survive a high-rate environment, the deeper reality for SMX is that they are no longer just a technology story. They have transitioned into an execution phase where their molecular markers are actually being embedded into the global supply chains of gold, rubber, and plastic. This is the gap between expectation and reality that we need to talk about today. If you are using a Fidelity IRA or using Fidelity mutual funds, you probably don't have a lot of exposure to micro-cap stocks like this. But for those who handle their own self-investing or use an individual brokerage, SMX is the kind of name that requires a different lens. You have to look past the ticker's past and focus on the current price of 24.17 USD as a starting point for a new chapter. The volume we are seeing today suggests that the weak hands have largely moved on, and we are seeing a more stable, institutional-leaning buyer base emerge. This is further evidenced by the way the stock is reacting to news. It's no longer just a pump-and-dump candidate. It's reacting logically to treasury updates and partnership expansions. In the coming months, there are several catalysts to watch. The full rollout of the denim tracking project is one. Denim is a stress test for the technology because of how much it is washed, treated, and eventually shredded for recycling. If SMX can prove that its markers survive that entire life cycle, which they have in pilot programs, then every textile manufacturer in the world becomes a potential customer. Then there is the gold verification, with the new gold standard being about evidence and provenance rather than just weight. SMX uniquely positions to become the global industry standard for bullion verification. When you consider online investing opportunities for 2026, SMX stands out because it solves a problem that almost every other tech company ignores: the physical reality of things. NVIDIA